Today I'm going to start from the education of the webinar. We're going to discuss the double top reversal patterns and the double bottom reversal patterns. I tried to find some double top and double bottom reversals in the market. So here we have, for example, the USD yen, and this is a double top reversal. First of all, a double top reversal is a bearish reversal pattern typically found on all type of charts, except point and figure. For people who know point and figure, it's a different thing. This pattern, the double top reversal on candlestick line and bar charts, is made up of two consecutive peaks, as we can see here, and they should be roughly equal.
Muted.
With a moderate trough in between, so a bottom in between of the two peaks. So for the double top reversal to happen, we need to have a previous trend. So we need to see an existing trend in place, and this trend will be reversed. And in the case of the double top reversal, we need to have several candles of an uptrend from before. As we can see on this one, we have a previous uptrend. The first peak should mark the highest point of the current trend. So this is the highest point at this example, in this case. Then the bottom should take place, and usually this point will create the support of the double top reversal. And then we're going to have the second peak. So the advance of the trough should go up to the previous resistance level. At this point, some of the trend followers, traders, will believe that the trend will continue, and in some cases we see prices going above the second peak, which creates a bull trap. This is something that we may see in future webinars. And then at the resistance, at the second peak, it finds a strong resistance there, and then the decline will start. The decline from the peak, usually it's a strong decline, and can be followed with gaps in between the candles. If we have, in the most of the cases, if we have a weakening between of the decline starting, and then we see a support break. If that does not happen, then we don't have any double top reversal in our chart. So we need to wait for this break to get a completed double top reversal. And I'm saying that because a lot of traders, they don't wait for the break of the support. They are eager to take position in the market, and in many times we see prices finding a support at the previous bottom, and prices never create a double top reversal. So we need to wait for the double top reversal to be completed. Finally, the double reversal gives us some price targets, and in this case, the price target of the double top reversal is taken from the distance of the peak to the trough. So we can see that if we take the distance from the peak to the trough, and this 1,188.98 points. So in this case, we can take the price target and subtract it from 110.67 in this case, and the price target goes to again, if we see 1,198 points below, the price target is at 109.45, and that one can work also in the future as a support. And as we see here, prices have come here and they have found support at this level. In addition, the support of the double top reversal can work as a resistance after the completion of the double top reversal, and we can see if we move on to the forward that prices have come here and they found resistance. So this top reversal formation, it's a very good example to look at because it works according to theory. Next one, we have the double bottom reversal trading patterns. I have tried to find some of the double bottom reversals. However, not so good as the double top. We can see here the Aussie USD H4. This is a type of double bottom reversal. We can see that there was a previous downtrend before. So it's the double top in reverse. We need a previous trend, and the trend should be a downtrend in the double bottom reversal. The first bottom should be the lowest point of the current trend. So this one here is the bottom of the current trend. Let me delete this indicator so I will make it more easy to see. And so we can see here this is the lowest point of the previous downtrend. Then the prices bounced up to a peak. This is the first peak. So a lot of trend followers, they may believe that this is just a retracement and the current trend will continue. However, the prices come here and they find a second bottom, which meets the previous support made by the first bottom. And after printing the second bottom at the same support, we can see that there is an advancement towards the resistance of the double bottom formation. If we don't see this break, we should never consider this double bottom as completed. So we need to wait for this break at 0.6957 in our case of the resistance line of the double bottom. And if we don't see that, we shouldn't expect that this is a double bottom. And of course, again, we have this resistance after breaking, turning into a support. We can see prices that have actually found the support here, even though the selling pressure was a bit high, so it went below the previous, below the support created. And then, of course, we have the price target of the double bottom reversal formation. We can see that, as we said before, is the distance from the bottom to the peak, and that is actually 1,302 points. And we can take that and see if we get 1,302 points. So the price target should have been here at 0.7087. However, this is not a great example of a double bottom. It's a double bottom though. Prices, we can see that they have been fluctuating at 0.7080, which has created the price target. So it's a kind of confirmation that this one worked as a double bottom reversal. And finally, what I want to say about the double top and double bottom reversal formation, we need to be cautious and take some steps in order to confirm that the double top and or double bottom formation is valid. In order to see that, we need to count the candlesticks from the one peak to another, or from this point here, from the point that it started formation to the point that there was a break and the completion of the double top reversal. So we need to see more than 60 candles in between, and that's a bit subjective decision, but I consider that we might see above 50, 60 candlesticks in order to make sure that this was a valid double top formation. I can see here that in between of the peaks, I have 80 candlesticks. That's an extra confirmation. And also sometimes we may see that the second peak doesn't coincide with the first peak. So here we have an exactly coinciding, but in order to make sure that we see a valid double top, we have a filtering of 3 to 5% of prices. So if prices are below of the first peak by 3% or above of the first peak by 3%, that's acceptable, and we need to be a little bit flexible because there is also a lot of noise in the markets, and most of the times the second peak doesn't take place at the same level like the first one. Secondly, at the break of the support and the completion of the double top reversal, we can apply some filtering like time filtering or price filtering. So some people they would prefer to wait for a close of the candle below the support before they decide to go to take a position in the market. Some other people they prefer to see a break of the price of more than 3%. That's subjective. I would suggest to see a close below the support, first rule, and the second rule to see prices moving below. If I have previous successful trades, I will go on the break. If my account is into losses, I would prefer to see a close and a 3% price below that in order to be more conservative. This is what I wanted to say about the double top and double bottom reversals. So now I'm going to move on with market updates and market developments of the market today. And the first one that I'm going to discuss is the Euro USD. So firstly, we can see that on the Euro USD weekly chart, prices have found a strong resistance at 1.1620. For another time, we see that this area here remains strong and works as a strong resistance. So prices have moved down, and now they are going towards the rising trend line. At the same time, stochastic is in the oversold zone, and that creates some expectations that the support at 1.0960 is going to hold, 1.1096 is going to hold its ground. On the daily time frame, we can see that the Euro USD is on a downtrend. Moving averages are above the prices and have created a dead cross. I've discussed these patterns in the previous webinar. That is increasing bearish expectations on the Euro USD. Fundamentally, US dollar has been supported by recent comments from the Federal Reserve officials, like the Philadelphia Fed President Patrick Harker, that he is expecting 2 or 3 times this year rate hikes. But actually, up to now, the officials that they have been commenting on the hawkish side, they are non-voting members. So that is a theoretical support by these officials. I would prefer to wait until Friday to take more clues, because on Friday Janet Yellen is going to speak. Janet Yellen is mostly on the dovish side of the FOMC participants, voting members. And nevertheless, we see that chances are increasing that there is going to be a June rate hike. And in addition to that, we have non-farm payroll release next week, which is a major factor. And another factor limiting chances for a rate hike is that after the June 16 FOMC meeting, we have UK Brexit referendum. In my opinion, FOMC is going to take this factor in his decision very seriously. On the Eurozone side, news hadn't been so good for the Euro actually this week. We saw weaker manufacturing PMI, we saw weaker services PMI. Yesterday we saw weak sentiment, and nevertheless, on yesterday there was a Eurogroup meeting, and there was a deal finalized on Greece again, but it doesn't take so much publicity in recent times like before. So actually, Greece has agreed on a new bailout fund of 10.3 billion euros, and we can also see today some news on Euro, and that we are going to expect it to come. So let me go to the hourly time frame now, before we see the news for today. So on the hourly time frame, again we see that prices are downtrending here. Prices went down to support at 1.1133. Moving averages give a bearish signal as well here. However, we're skeptical about this bullish divergence of MACD here. So let me put the uptrend line. So here we have an uptrend line on the MACD, while prices have been going to fresh lows. This is a concerning point, and it creates some expectations that prices may not go below 1.1133 or 33, or prices may not be bearish on Euro USD in today trading. I would expect most likely a correction or sideways to happen, and I'm saying sideways because Euro is squeezed by the fundamentals. There is a bearish attitude towards Euro because of the recent negative news this week. And as I told you today, we are looking at German IFO business climate expected at 106.9. That will come out in 40 minutes from now. And after the Euro USD, I'm going to discuss the USD Canadian currency pair. I have chosen to discuss the USD Canadian because today we have the Bank of Canada decision rate. Let's look at the technical side. USD CAD found support at 1.2458, which is 10 to 11 month low at the moment, and bounced up to 1.3190 in the last 4 weeks. We can see that there is a doji candlestick formation happening as of now this week. That is not completed yet. However, it's a bearish, potentially bearish formation, and that even we like it or not, it creates some bearish expectations on the USD Canadian. So in addition to that, as we discussed the previous week with Jakub, there is a sandwich formation. Prices are in between of the moving averages, and stochastic is overbought. So in the way I see it, the 131.90 or 132 resistance level could be considered as a resistance area or a strong resistance level. We can see that this area in between of 134.70-80 could be seen as a strong resistance zone. Let's go to the daily one. And the daily, we see that there was a downtrend line. However, the downtrend line was breached. It's similar picture like the weekly, but more in detail. And there was a retracement to 131.84. If we take the Fibonacci from 138.61 down to 124.62, that's a 50% Fibonacci retracement. That's a bit subjective though, as I took this peak here. And we should apply now actually an uptrend line, because we see higher highs and higher lows, and that's a new uptrend line on the USD Canadian, which it suggests that price will continue higher. So we have a bit of conflicting picture between weekly and daily up to now. However, we have to see here as well on the MACD. MACD is making a bearish divergence. We see a lower low, however prices are moving on a higher high. That's an indication of a weakening uptrend. And let's go to the intraday and to the hourly time frame on the USD Canadian. So we see here that there has been a rising wedge. That rising wedge, actually rising triangle to be more correct. So that rising triangle, it's a reversal formation, and we can see that the reversal formation was actually completed with this break here. Let me highlight it. So at this point, the rising triangle has been completed. Prices moved lower towards the uptrend line, and they found support there, as we can see. Let me move that support line. At 138.87, we saw prices finding support. And if we look at the fundamentals, as we said today, Bank of Canada is expected to release its monetary policy and keep rates unchanged. The main focus today is on the statement, where we're going to see the tone. I would expect the Bank of Canada to be a little bit more cautious on its tone. In addition to that, the crude oil prices have been strong, and they have almost rose up to $50 per barrel. And if we look at the news releases of the May month, we can see that the most of the news were weaker. I have created a table here, and let me tell you in quick what the news were. So manufacturing sales, wholesale sales, retail sales, the new housing price index, trade balance, building permits have been weaker for the Canadian dollar, and even employment change has been slightly weaker. What we saw stronger was the core CPI. So if we consider a core CPI a factor that the Bank of Canada is considering to take its decision, they are not going to reduce the rates. However, we see that in overall economic environment, this month has been weakening for the Canadian dollar. And also we had the wildfires in the beginning of May, and all this has created some bearish expectations on the Canadian dollar. So with the fundamentals set, the USD CAD is most likely to move higher. So we have a conflicting picture between technicals and fundamentals. We may see a correction today, and perhaps we have already saw the correction. On the daily, there is an uptrend. That's the most strong picture that we have, despite the bearish divergence of MACD. Of course, a correction could take place down to the moving average of 129.10 before we move and test for fresh highs. But nevertheless, we need to keep in mind that tomorrow we'll have some important news for the US dollar, like core durable goods order, we'll have unemployment claims, and then on Friday we'll have Janet Yellen. And in what I'm expecting is that the US dollar will keep its strengthening path. That's everything for today from me.